Hello again. I just wanted to make a quick video, try and make it quick anyway. There are quite complex issues to discuss about the FCA's press release about censoring CACEIS, the sub-custodian of WealthTek, from late 2020 onwards, and CACEIS in their current form agreeing to make a contribution to client losses of 31.7 million. And they go on to then say, combined with similar action they've taken against Sapia Partners, which I covered, and Barclays Bank, which I covered, that means that they've secured over 57 million in total for WealthTek clients in terms of losses over the last year. Now that's obviously a good thing. But there are some underlying issues that we need to look at that can't be overlooked, because what I try to portray in the book Lost to the Races, and I'm referencing it, not promoting it, I'm not looking really to monetize anything, it is what's unusual with WealthTek is the breadth of the failings of the system. That there was systemic failings that allowed the WealthTek scandal to evolve. And here we have collectively we have a high street bank which failed to check the FCA register whether the business had client money permissions, and they would have seen it didn't. Similarly with CACEIS, even worse actually, they're sort of suggesting that they checked the register on 3 occasions, but then still continued to allow WealthTek to operate a client money account. It's not really clear why that is. It's quite extraordinary, really. And then Sapia, I spoke about the dangers of these sort of distant compliance AR type relationships where businesses operate under the regulatory permissions of other businesses, didn't ensure that there were checks and balances in place on client money transactions, so money that was moved out of client accounts. And I covered that in the book and said there was an alarming lack of division between the front and back office, and John from what I could see seemed to and Sapia were content with this, to have quite and others in the business were seemingly content as well. This sort of dominant position in the front, straddling the front and back office, which is always a really dangerous sign, because it just navigates any checks and balances. If you initiate a payment, there should be somebody there operating independently to say, yeah, that's compliant, that's right, or flagging it up and saying, I don't understand why this is happening. Why is this money being sent to this account or at all? So collectively, they are, quite catastrophic failings. Now, a lot of the money that was routed through Collingwood Wealth, for instance, which is part of this scandal, was routed through a Santander account, and I think Santander will almost certainly have to answer as to why they weren't able to spot how very large, suspicious, lumpy transactions were able to run for quite such a long period of time and not raise any concerns. If you watch one of my previous videos, I said, back in a system of arbitration between John and a former trainer, it was explained that when money was sent to an escrow account through Collingwood, solicitor operating on behalf of the trainer flagged it up as a strange one in terms of source of funds, and the transaction was then routed out through a different route. So if he could, or she, I don't know, were able to spot a suspicious transaction, why weren't Santander? But we've got a very wide systemic basic level errors that have been happening, and I described it in the book as these are things you do, if they happened in a frontier market. Now, for instance, strange enough, Poland still, I think, categorized as a frontier market, but if they happened there, people would be quite stunned, for instance. And the UK is promoted as a sort of premier financial services market, and now why, for instance, is it even possible to open up client accounts when you don't have permissions. There should surely be an integrated system, like a licensing system, where if you tried to do it, it just wouldn't happen. You'd be blocked. Why was the FCA, for instance, content with operating a fit and proper system where people could sign themselves self-certify as fit and proper, and have the option to not disclose things like bankruptcy orders and things like that, which I covered in the book. So essentially, what the FCA have done here, it's good, and it's very very consistent with obfuscation as well. So you sitting down with these companies, they're sort of saying to them, look, you need to make a big contribution. And Barclays' contributions and fines look oddly small, but you need to make a contribution to the losses these clients have suffered, and then we will either not fine you or fine you less, or so on and so forth, in the mantra of cooperation. But in essence, what that's enabling the FCA to do is to spin a catastrophic failure into a moral success. Because none of these things could have happened outside of the framework of their own catastrophic failings, which is, quite extraordinary. And it's the same with Woodford as well, which I've covered in lots of different videos. That he secured permission to run the fund the way he did. Now, if you're running private assets in a retail, fund that's promoted to retail investors, also institutional investors, which is ostensibly an equity income fund, which people expect to be investing broadly liquid companies that are paying either growing or sustainable dividends. If you're running a tail of private assets, that's all well and good if you've got net inflows, sentiments, fines, so on and so forth. But if something goes against you, and even the best fund managers can have periods of underperformance, and you get net outflows, it's obvious that's going to distort the fund, it's going to put it under pressure, because you can't sell these private assets. And if you did, it would have to be at a very, very low price. So you have to sell your liquid assets, so you're going to get these imbalances. So that was always known from outset. The FCA had full visibility of that process. They had full visibility of Link's decision to suspend the fund, which in many ways was sensible, so you could rework it, and seemingly had full visibility on them taking the decision to close the fund, and which led to this worst case scenario where some of these private assets were sold at heavily discounted prices. Now, private assets really should be in closed-ended funds. It takes away the liquidity strains, but it doesn't, in essence, it's not the magic solution, because those closed-ended funds can remain stranded at discounts for long period of times, which we've seen in the investment trust and associated sectors. Nobody's really asking how these things could have happened. Why could these situations have even come about? Nobody's even sort of appreciating that they couldn't have come about without the regulator themselves failing. And since the FCA were sort of creating the current form in 2013, I think we've had 6 prime ministers. We're now on 7. And we've got back to this situation, which people have been grappling for a while. David Stark has been more structured of how he's sort of framed it, about since the time it didn't start with Blair, but he certainly accelerated it, and others have worked substantially on it since, where we've seen huge amounts of authorities, agencies, and generally what the term quangos that have accumulated vast amounts of power. And not subject to any meaningful accountability in terms of their own failings. And the FCA's one such. Nobody's really said, well, this happened over such a period of time, such a systemic, and I haven't even covered the whistleblowing, which is, I've featured on many videos in the book. These are systemic failings throughout the whole system. How can we be be assured that these will never happen again, aren't currently happening, or have happened in the past and not been properly detected. It's quite extraordinary, and I can only really explain it where we're almost in a situation where democracies become like an illusion, almost like Plato's cave allegory, where you're looking at sort of shadows on the cave wall that aren't really real, and it's like that is what democracy's become. We're looking at this system. Nothing's changing. The faces change, but the system doesn't change. And really, the real power is being exercised by a vast portfolio of Quango-type entities that are just able to sort of ghost around without any meaningful accountability. And that's really what people are missing. And I think it's really part of it also is the standard of politicians we have. If we take the 6 leaders that we've had since 2013, the standard of them is dreadful. And I don't think they even understand how financial services markets work, to be able to see how this sort of model is completely flawed, where you have your regulator operating as your prosecutor as well, because it sort of bakes in the obfuscation which confounds the system that I've just been describing to you. And I think if you look even at some people who are aspiring to be Prime Minister, let's start off with the standard of those who, being Prime Minister. And I don't think Burnham will be any better, he'd possibly be worse. Look at Liz Truss. Liz Truss, she's been busy around the CPAC things and, popcorn, whatever you want to call it, trying to repair her reputation. But, what she doesn't realise, she's trying to blame everybody else for crashing and burning. And had Elizabeth not passed, she'd have crashed and burned probably 2 weeks even sooner than she did. She doesn't understand that she came off the back of probably the second biggest socialist policy that we've seen in recent years in terms of the energy price support, after the Russian invasion of Ukraine, and then came in saying she's going to sort of slash taxes and so on and so forth. And it's obvious a bond market's going to be highly sceptical about that. Some of her ideas weren't bad, but she went at it like a bull at a gate and didn't even understand it. If you look at, she talked about Thatcher and so on and so forth, but if you look at Thatcher, her time, it was really only in her second term that she really got to grips and started to make the real big changes like privatisation and reform of financial services and so on and so forth. And they've had mixed results since. And she just didn't understand that her failings were her own doing. She also says that bond yields have been higher since, and that shows it wasn't all her own fault. But she doesn't understand that it was the velocity of the bond yield changes that led to the structural issues in the market and the LDI problems. And she doesn't understand that. And what's she even doing in power? Just eminently unqualified and not intelligent enough. And you also see it with the commentators. If you look at Farage and Rupert Lowe, for instance, they'll say, well, the FCA's shackled up the city, and there's no risk taking and so on and so forth. Like, taking risk is not in itself is not the issue, because if you go back to the 80s and 90s, I can still remember they refer to this risk-taking era where the city was in this glory, as they tried to say. It was certainly more eminent, I'll give them that. But there were scandals. There were bearing scandals. Midland Bank fell into issues that had to be rescued by HSBC. There's the BCCI scandal. There were lots of scandals. So it's not that at all. I mean, clearly the rule book needs to be tidied up to fundamentally just reflect the fact you need to be competent and put your client's interest at the heart of everything you do. That's really Doesn't need to have a big cumbersome book to do that, so that needs to be thinned out. That's, I think, been sort of recognised. But really the issue is this, this obfuscation that's built into the regulator-prosecutor model, and this general trend in society where democracy has been subverted by this huge portfolio of almost like off political balance sheet entities, quongos, where they're able to accumulate huge power and not be subject to any meaningful accountability. That is your issue. And it's extraordinary that nobody in Parliament has looked at this. And it's possibly because we've had so many prime ministers, and those who've come in have such a weak understanding of looked at this and said to the FCA, look, it's very good that you've managed to claw back these losses. I mean, it doesn't take away the opportunities that have been lost had the money have not been diverted, transferred away. Doesn't take into account the stress, anxiety, so on and so forth. But nevertheless, it is a positive thing. But nobody said, look, none of this could have happened without you failing yourself. So how do we fix the system? And that's really where I'm coming from. And that's where I try to come from in the book, Lost to the Races. And until we get to grips with that, and it's a wider problem, judges, regulators, authorities, so on and so forth, operating with huge power outside of any proper mechanism of accountability, whereas the democratic process has just become effectively like a sat in a cave, as Plato said, watching shadows on the wall. That's it for now. Take care. Bye.